Now, today it looks like the market has dropped a little bit, but something very interesting happened with precious metals. At exactly 11:30, someone decided to unload over 2 billion notional of silver into the future pits. Over 23,000 silver future contracts suddenly just went onto the market as soon as Europe closed, and it brought silver completely down. Gold is also getting hit hard, but less aggressively. So it looks like they're dropping the price of gold and silver once again. They don't want this rising because this is an indicator that there's something going on with the dollar. And they're trying to keep everyone in the dark. That's their whole plan until the very end. Think about what they did during 2008, where they were telling you that there were no problems. They were telling you that everything was sustained. They were telling you that there is no recession. They wanted everyone in the dark until the last second. When the market came down, things were going haywire, and the entire economy just came to a screeching halt. Credit froze up, and it was a complete disaster. Now, we see today that the initial jobless claims, they plunged by 19,000 last week to 223,000. This is now the lowest level of initial jobless claims since March of 1973. The lowest in 44 years, and is very close to the lowest level since 1969. This is now the longest period of declining initial jobless claims in U.S. history, from March 2009 to March 2017. Now, when we look at the initial jobless claims, and we've looked at many different graphs of when the recessions occur, and we're starting to realize there are patterns that we can see. Now, with the initial jobless claims, every time we hit a very low point, we have had a recession. We are at the lowest point that we've ever been, and each time the initial jobless claims go lower and lower, we get a bigger fall. Now, we can see back in 2007 going into 2008, we hit a low point in initial jobless claims. Going back prior to 2001, we saw the same exact thing, and we go throughout time, we see the same exact pattern. So we can see this fits into our indicators showing that we are in a recession right now and the system is breaking apart. We see another store has declared bankruptcy, BCBG. Now, we're seeing a lot of retail stores closing. There's a lot of commercial real estate on the market. And between last year and this year, we're looking at 2,500 retail stores that are going to close. This is a complete disaster. This is not the economy getting better. This is the economy ripping itself apart. Because what is happening right now is we're deep in a recession. We've been in a recession since most likely last April. This is when I started to talk about it, and we can see as we move forward, it is getting worse. We're approaching that point in time where we're almost in a depression. Now, very interestingly, we know that Caterpillar, well, they haven't been doing well. They have gone much longer in a period of time of declining sales than in the Great Recession. And federal officials, well, they have executed a search warrant at 3 Caterpillar facilities, which is very odd. Now, there are agents there from the IRS and the FDIC and Commerce Department. They're all involved in searching through the company. Caterpillar right now is cooperating, and we can see that at this point we don't know exactly what is going on as of yet, but we know the company is in trouble. Now, a couple reports ago, we talked about the art bubble and how the very wealthy, they're looking for places to put their money to get a return. And one of them was art. The other one was housing. And we can see that they've piled their cash into art. Art was going up and up and up. But it looks like the art bubble is popping right now. And what we're seeing is that those individuals who purchased their art, like Russian billionaire, he paid $54 million or $85 million for a landscape by Paul Gauguin in a private transaction. I don't know if I pronounced that right. In June 2008. And it has dropped by 74%. And many others who've purchased art, it is dropping quite fast. And if you look back in 2016, we see the number of high-value works of art sold. Well, many of them have dropped by half. And this is another bubble that is popping right now. Now, in many of our reports here, we talked about the pension problems, where they're going bust. It's not just private, it is municipal, state. And we see CalPERS. Well, they're threatening to slash pension payments to a group of retired city workers after their city council members fail to understand basic pension accounting. And guess what? They don't have the funds. We're seeing this over and over, and the people are saying, listen, I paid in 100%, and I don't understand why I don't have this money. People are not understanding that they were gambling with the money, and these pensions, they don't have the money anymore. And what we're seeing right now is that CalPERS, well, it's the largest pension in the U.S. It's certainly not the worst off from a financial perspective, but we can see that there are many pension plans that are a complete disaster. And as we approach more and more individuals taking their pensions, and as time goes on and the economy deteriorates, we're seeing that it's going to be a complete disaster. In fact, there is roughly $2 trillion in total underfunded state and local pension liabilities around the country. Now, the situation looks even more dire if you adjust that underfunding amount to reflect an appropriate discount rate rather than 7.5% dream rate that CalPERS and most of America's other pension Ponzi's use. In fact, if we look at the calculation, the real taxpayer liability outstanding to America's public pensions, and found it to be closer to 5 to 8 trillion and not 2 trillion. I mean, this situation right now is a disaster, and people are going to be really hurt by it. Now, Trump gave his speech to Congress, and he said some very interesting things in the speech, and this gives us some type of indicator on how well the economy is doing. Now, the first one he said was 94 million Americans are out of the labor force. Now, we've been saying this for quite a while. Not just myself, everyone in the alternative media who's looking at the situation been saying this over and over and over. He said 43 million are living in poverty. 43 million Americans are on food stamps. More than 1 in 5 people in their prime working years are not working. We have the worst financial recovery in 65 years. Actually, it's not even a recovery. It's a manipulation. It's an illusion to make you think we've recovered. In the last 8 years, the past administration has put on more debt than nearly all other presidents combined. We lost more than 1/4 of our manufacturing jobs since NAFTA was approved. We lost 60,000 factories since China joined the World Trade Organization in 2001. Our trade deficit in goods with the world last year was nearly $800 billion. And Obamacare premiums nationwide have increased by double and triple digits. Arizona is up by 116%. We spend trillions and trillions of dollars overseas, and we didn't do anything here in the United States for the infrastructure. And that's why things are falling apart. Now, when you look at all this, this is what we've been talking about for a very long time. He's letting the country know that the economy is a disaster. The economy is collapsing. I mean, he can't just come out and say, listen, hey, the economy's collapsing, everyone run for the hills. People would be very, very nervous with that. But he's letting it out a little bit at a time that the economy is a complete disaster. And we can see right now that James Rickards, David Stockman, they're all saying that he cannot avoid the debt crisis. We have this date coming up, which is March 15th. We know Obama and Boehner, they planned this. Obama was going to be out of office. They probably thought Hillary was going to be in there with all the manipulation they were going to do for the election. And they thought, oh, this is perfect. We know this is going to be a problem. And all we have to do is show that Russia, North Korea, China, whatever country they wanted, they cyber attack, we had some type of major event, and we could just blame it on them because we were in a great economy was strong, and then they came around and they cyber attacked and brought it down. But there's a problem. Trump is in office. So this is a problem for the deep state, the central bankers. So what they're doing right now is they're preparing for the economy to come down at a later period because they can't have it come down too soon. Why? Because Trump didn't do anything yet. A lot of talk, a lot of plans, but they can't say, oh, the economy came down because of Trump. So the Fed right now, they are trying to keep everything together. And most likely, they'll probably raise rates in March because that is another signal that they're getting ready to bring this whole system down. They want it to rip it itself apart, but they don't want it to do it too soon. And if they don't raise rates, well, they're going to lose credibility because they said they're going to raise rates about, 3 times this year or so? So they're going to have to do it. And it looks like the percentage of them doing is continually rising and rising. They're at 82% expectancy rate for the odds of another rate hike in about a 2-week time period. But what's very interesting about all of this, and we've been covering all of this, is that Charles Nenner, Cliff High, Harry Dent, we're seeing David Stockman, James Rickards are all saying that we're going to have a problem in the second half of this year. And then we have Bank of America. And they actually set a date for the entire system to completely fall apart. Because what they're saying is when the Fed starts to tighten, and it keeps tightening, we have a financial event. We saw this back in 2007, the subprime crisis. We saw it back in the tech bubble, the S&L crisis, the 87 stock market crash, the 82 crash, the 74 crash. And here we are where the Fed is starting to tighten. And what Bank of America is saying right now is that they're recommending that the second half of 2017, people should be buying puts. Now, very interestingly, Soros bet $500 million that the economy is going to collapse. He bought puts. And from all these individuals, we're starting to get a date when things are going to rapidly fall apart. The central bankers, the deep state, they cannot wait any longer because they know that Trump realizes what's going on. They don't want him to bring it down. They want to do it themselves. They want to control it because they need to control the narrative. If it happens any other way, a black swan or something like that, they cannot control the narrative and they will be blamed. This is the thing they don't want to happen because we know that John Yellen was already out there saying the economy is weak, it's disappointing, and if things should start to fall apart, well, don't blame the Fed. The corporate media is already out there saying that the economy is worsening. Now, we're going to see a lot more of this news as we move through the spring and move into the summer. Now, they're not making a really big deal about this debt ceiling problem. Not as yet. And it's coming up in, 13 days or so? But you're going to see right maybe a day or two before, they're going to start making a big deal. And right after, they're going to really harp on it. And they're going to keep playing it up. Because we can see at this point that they're going to prepare and get ready for this system to come down. And this is going to play into what they really want to do, because once the economy falls apart and it collapses, we are in a state of emergency. And throughout the years, all these presidents, well, they created all these executive orders where Trump can take charge of everything. Now, is this a good situation or a bad situation? Well, the corporate media is going to make it look like a very bad situation because they're going to call him a dictator. Now, remember, this was all planned for a different individual, a deep state part of the system individual. And this is why all these executive orders were created, because when the time was right, they were going to take charge. They weren't going to use Congress. It was going to be a state of emergency. But we can see they're going to play this the other way because we have our date. It's all coming together. And more individuals, more companies, more financial pundits are coming out saying, yeah, it looks like we're heading towards this time frame. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.